These concerns coming as we head into the third quarter earnings reporting season. You're looking at the supply chain potentially having an impact on the fourth quarter earnings numbers. Tell us what you're expecting.
Well, we're dealing with the Delta slowdown. I don't think that that's going to be really the case when we're looking at earnings. We've got issues with, we've got 60 ships, waiting outside the, California, Long Beach, trying to get these products to people. But here's the thing. I think that most people looking at industrials and the materials understand what these supply chains are going to be. So I think what you're going to see is once we start, this isn't going to stop in the next 3 months, in the next 6 months. I think it's going to be with us for another year, maybe even longer, because we have such demand. People, basic example that I think everybody can understand. If you're remodeling your house and you can't get these parts that are sitting in the Long Beach port waiting to get to you, you're not going to stop the remodel of your house. It's just going to push it back so many more months. On top of that, you're going to have people who, they're not asking what the price of these materials are. They're saying, when can I get them? And if there's a 3-month delay, they're going to have to sit and take it. So when you look at the pricing power, I would love to see in earnings, I would love to see some CEOs talk about a little weakness in the past few months getting things to market. You can certainly see that we've had some disasters in, Bed Bath Beyond taking a nosedive this week because they can't fill their shelves. But I think that's going to be a buying opportunity. And I think a lot of investors are already aware of that who follow these type of old economy names. And I think it's going to give you, margins. People think you can't, the margins are going to compress. I think that's a misread of what we're going to see over the next couple weeks. I think it's an opportunity to buy what we might perceive as a short-term compressed margin because you're going to be able to push those prices to consumers, and that's going to mean better earnings going into next year, and also means we're going to have growth left over next year from everything that didn't get pushed through to the end consumer over the last few months and the next 3 or 6 months. So it just means the old economy is going to have a long more tail on profit growth. I think they're going to be able to keep their margins. And I think the naysayers on that, I think they're reading this wrong. This is a tremendous opportunity. I think you're going to see with the 10-year yield exactly what you saw in the first quarter of this year, where you see a lot of industrials, a lot of materials, a lot of banks start floating up as you start seeing cracks in the mega cap tech, just like we saw in March. We saw that over the last 30 days. I don't know why this trades so hard.
Yeah. But just to be clear, you're expecting more pre-announcements related to the supply chain for the third quarter reporting season? Yes, you're right to mention Bed Bath & Beyond. The stock lost a third of its value yesterday. They can't get the products to put on the shelves. Are you expecting more supply chain issues to be the reason for companies to say, we're going to come in below expectations in the next couple of weeks?
Absolutely. It's such a great excuse. If you have a bad company and you haven't been able to run it right, I think that, what's the excuse of the quarter? Supply chain problems.
Yeah, it's a great point. All right, let me move on to the Federal Reserve.